Prior to the formal part of the meeting, I just want to make a few remarks about TOP's performance during 2017 financial year, as well as some other recent developments, if I can. I am delighted to be standing before you today to share with you some of those insights into the broad successes of Thorney Opportunities, or TOP, their portfolio over the past year. The continued growth in earnings, increased dividends and further share price appreciation have all been excellent achievements. You can see on the chart, Craig, can we see on the chart? Yes. I'll leave it up there while you look at it, but a net profit before tax increase of 77% for the 12 months to 30 June 2017 provided significant vindication for the long-term absolute return investment philosophy employed by the Thorney investment team for Thorney Opportunities Limited, your company. For the 12 months to 30 June 2017, the net tangible assets per share rose by about 18% to 71.6 cents per share, and pleasingly, the NTAs continued to grow strongly with contributions from a broad number of investment positions. So as at 31 October 2017, the last released NTA, it was at 75.3 cents per share, a further increase, as I said, since 30 June. The consistent performance enabled an increase in the level of fully franked dividends paid for the 2017 financial year as well to 1.25 cents per share. And generally we take the approach that if we do get fully franked dividends, if we're in receipt of them and we have franking credits, we will distribute them to shareholders. We think that you're entitled to them, so whilst managing cash, we'll distribute as much as we can back to you guys on the journey. So we hope that it continues to increase on this journey. Whilst the 2017 financial year saw fewer new investments, there were numerous positions which matured and we witnessed underlying value manifest. Again, you'll see somewhat of the breakup. This is going back to October in terms of the different exposures that you can see for various investee companies we've got. We have 3 presentations from top investment portfolio companies today, but ahead of those presentations, I want to make reference to a few of the companies which have performed strongly over the last 12 months or so. It is the style of these investments, the nature of them, which are the bread and butter type of successful Thorney investment that we've adopted, and it's our philosophy and approach over the last 2 decades. Fairfax Media, which gets a lot of attention. I've been on the record for some considerable time in encouraging the board of Fairfax Media to actively pursue strategic steps to deliver value to its shareholders. We pushed for share buyback at a various point in time. They did one, and it was very value accretive to shareholders. Now, after many twists and turns over the past 12 months or so, it was pleasing to see that on 2nd of November 2017, the shareholders of Fairfax voted overwhelmingly in favour to separate Domain Holdings Australia Limited from Fairfax, with Fairfax retaining a shareholding interest of 60% and the remaining 40% being distributed to Fairfax shareholders, of which your company was one. As you might be aware, Domain Holdings Australia commenced trading as a separate entity on the ASX on a deferred settlement basis just recently on 16 November, and as a listed company for 1 week or so, its ASX debut has been very encouraging. The ongoing challenge for the board of Fairfax is now to articulate the strategy for the traditional media assets retained by Fairfax, excluding Domain. So we've been engaged quite closely with the chairman there, with the CEO, numerous executives, and we're very supportive of Anthony Catalano, who's the CEO of Domain, and we wish him all the success in that as a separate company. And we believe there is plenty of opportunities now for Fairfax in the environment where the media laws have recently changed, for them to be active buyer or seller of assets. So it's going to be a very intriguing 12 months to see what might emerge at Fairfax. Another company in the top investment portfolio where we have seen the share price rise over the past 12 months has been Austin Engineering, mining services company based out of Brisbane with operations through Australia, South America, North America, Indonesia and other parts of the world. We were instrumental in helping Austin fix its leadership team. They have a new chairman, a new CEO, a new CFO. Fixing its balance sheet. They were very unpopular with their banks who had felt that they were somewhat misled. The banks wanted out. We helped them raise money to support the balance sheet to enable them to pay off the banks. And they had some substituted other financing, which they've now just announced recently they've replaced on better terms. And the balance sheet is now very robust and in a position to support the working capital needs that is being expressed by what they've said is perhaps the best order book and tender book that they've got since the last 5 or 6 years. So with a recovering operating environment, the earnings outlook for this company, Austin, and the potential value accretion accordingly remains very compelling. Is an example of Thorney's relentless investment approach to remaining focused on the value proposition for our investee companies. So just to remind you, we supported and anchored the capital raising of this company roughly a year ago, I think, at 8 cents a share. Today they're at 26 cents a share, I think, with some analysts saying the fair value for this company is north of 35 cents in the short term. So we remain optimistic. They've still got work to do, obviously. It's a changing environment, as we've seen with the CapEx cycle starting to come back into the mining services sector. They're a much leaner organisation, as I said, strong balance sheet, and we're very excited about the prospects for this company. I'd also like to comment on some exciting developments which have occurred over the past few days, in particular the announcement yesterday morning of a capital raising for Thorney Opportunities Limited, and further to the announcement made this morning to shareholders and the ASX, TOP has successfully completed a capital raising to its maximum 15% of capital outstanding, being $18.3 million from sophisticated and professional investors at a price of 72 cents per share. And I want to thank some of the people in the room here and beyond for supporting this raising. And subject to approval of a meeting, an AGM that will be called relatively shortly, I will also commit, which has to approve my involvement, I will further commit $3 million to remain the largest shareholder in Thorney Opportunities Limited. And in addition, all shareholders on the register as at 22nd November 2017 will be given an opportunity to participate on the same terms by way of a share purchase plan, the details again of which will be sent to shareholders shortly. We are excited about this capital raising as we are currently assessing a number of new investment opportunities for TOP. And 2 recent investments I will just mention today are TOP's involvement as an anchor participant in another resource services company, which is Mermaid Marine Offshore Limited, and also Southern Cross Electrical Engineering Limited. Both of those companies we've had a history with throughout the journey of Thorney. We know the leadership, we know the management. We were larger shareholders in those companies at various points in time. We had sold out significantly, but we've kept our relationship and we've kept our knowledge, our intellectual capital in those companies, and we felt it was an opportune time to again purchase shares in those companies. Again, I'd like to thank the shareholders of TOP for their continued support, the board for their guidance, including Ashok, who's not here, and hard work over the past year, and in particular, again, the investment team at Thorney Opportunities. I look forward to communicating with you again shortly, as we do with our regular updates, and as we continue to assess a number of new investment opportunities. And obviously, If they require filings, we will do that, and we'll keep you as informed as we can, whilst protecting some commercial in confidence discussions and positions that we might have with smaller shareholdings, which may become larger and fileable at some point in time.